Record on the
Okay, hi everyone, and welcome to today's event. First, I'll just introduce myself because some of you may not know me. My name is Alice, one of the event managers at GYEF, and now I'd like to welcome today's guest speaker, Joshua Salem, who studied economics and psychology at NYU and is currently a corporate and investment banking analyst at Citibank. Also, a recorded version of this meeting will be made available on our Google Classroom as well as this presentation. So if you're not here, you can definitely review it later on. And we would love to hear from you. So if you have any questions or comments at the end, you can just put them in the chat, and there'll be a Q&A at the end as well. So feel free to unmute that. So now let's give a warm welcome to Joshua.
Yeah, thanks, Alice, for the introduction. Can you guys see my PowerPoint okay? Okay, cool. Yeah, so just a little bit about myself. My name is Joshua Salem. I grew up in Los Angeles, California. I went to New York for school because I wanted, change in pace. California could be a little slow at times, and I think, in your young 20s, you kind of need that everyday rush to keep going and strive for higher things. And that's why I went to New York University. I graduated in 2022 with a BA in economics and psychology. My hobbies include fitness, basketball, reading, and drumming. And I'm currently working at Citi in the corporate and investment bank. So working in finance, it's split between two types of divisions. You have the buy side. So this includes firms that buy and sell securities or assets for their own accounts or for the accounts of their investors. To give you an example, let's say like a private equity firm, right? The typical structure of a private equity firm includes a few general partners, which are the people who manage the business on a day-to-day basis, on an operational basis. And then you have limited partners, which are the investors who pull their money into these funds so that they can make profits, right? And so how these funds work is they look at companies who are undervalued. They look at companies who are struggling financially, operationally. They buy them at a low price, and then they sell them at a higher price 5 to 7 years down the line. And just to connect it to something relevant to make it a little more easy to understand, let's say LeBron James, right, who has $100 million of cash. And then you have Tom Brady, who also has $100 million of cash. They can totally get together, form their own little private equity fund, and then hire a few general partners to manage that $200 million they have, and then use that $200 million to buy other assets, buy companies that are undervalued, sell them for higher, and then they grow their money that way. So it's a very lucrative business that a lot of high net worth individuals like to pull their money into to make profits on. And then you have the sell side, which includes investment banking, equity research, corporate banking, sales and trading. The sell side includes firms that sell advisory services, sell research services to the companies. And so just to explain a little bit, investment banking typically deals with mergers and acquisitions. So when a company wants to buy another company, let's say Coke wants to buy Pepsi, for whatever reason, let's say Pepsi has locations in Malaysia and Coke doesn't have any locations in Malaysia that want to grow their presence there. That could be a very valid reason on why Coke would want to buy a Pepsi. So investment bankers would help Coke with that whole acquisition activity. And then you have equity research. These guys typically publish research on stocks and companies, and they publish it for the entire world to see. They can also sell their research services to companies. And then you have corporate banking. These guys are in the business of lending. So, companies, when they want to grow, when they want to acquire other businesses, when they want to grow operationally, financially, they need money, right? They need capital. So corporate bankers would manage these relationships. These companies would go to banks from asking for money, and corporate bankers would tell them, okay, like, we can give you this money, but how are we going to profit off it? And typically corporate bankers like to lend for the purposes of acquiring fees in, let's say, M&A or ECM or DCM, which is like capital markets fees. And then you have sales and tradings, and these guys typically work in the market, do a lot of sales activities. I don't know too much about sales and trading, but I know they're on the sell side. And then so when working at Citi, Citi has this dual coverage model where investment bankers and corporate bankers work closely together to service clients. So as I said earlier, investment bankers typically work on the M&A and the strategic advisory. So just alluding back to my example on Coke and Pepsi, let's say Coke wants to buy Pepsi. The investment banking team at Citi would advise Coke on why this is a good transaction. They would do the financial modeling, the valuation. They would figure out how much Pepsi is worth. Let's say they do an entire Excel model, which typically takes about months, right? A whole investment banking team works on forecasting the financials, figuring out how much exactly Pepsi is worth. And let's say they come up with a valuation of $5 billion. The corporate banking team would look at that $5 billion and then help the client figure out how much of that $5 billion is going to be funded by equity or how much of it is going to be funded by debt. And that would go under the capital structure and financing advisory aspect. And then alongside that, the corporate bankers also work on the provision of capital, risk management, transaction services. So together, these two teams really work closely together to service clients. And so the specific group I'm currently working in is the sponsor portfolio coverage group and global capital management. So on the sponsor portfolio coverage side of things, what I mean by sponsor is basically a private equity firm or an asset manager that has a bunch of companies in its portfolio. So I'm not sure if you guys are too familiar with like the private equity space, but the biggest players out there include Blackstone or KKR. And these giant private equity companies have tons of money and they have a giant portfolio of companies, right? And so, as I said earlier, private equity firms buy companies that are just struggling financially and operationally. And so these companies need a lot of capital to get going, right? So my team works closely with these portfolio companies of private equity firms to help them grow. And the way we help Citi grow through these relationships is when we lend to a client, right? When we give money to a client, it opens up a lot of opportunities around the bank. So, let's say I'm not sure if this is a little confusing if you guys aren't too familiar with how private equity works, but let's just say Coke owns Pepsi, right? And Pepsi needs money because they're struggling. On my team, we will give Pepsi $200 million only if they give us that M&A mandate or that opportunity to lead their mergers and acquisitions process 5 to 7 years down the line when Pepsi sells itself to another company. And so the products we typically deal with are revolving credit facilities. These are basically giant credit cards for companies. So let's say like Pepsi needs $200 million and we issue an RCF or a revolving credit facility. It's just a $200 million commitment and they can draw on it anytime, but they would have to pay a fee if they draw on it. And you have term loans and TTS products and global markets products. These are very niche things. So I don't want to get into it too much, but typically this is just like the types of products that we use to give companies capital. And then in terms of deal related work, when a merger happens, of course, we figure out how they're going to finance that acquisition. And then on the global capital management side of things, our team is responsible for strategically allocating Citi's capital to optimize returns. So as I said earlier, when we lend to companies, we hope that this lending relationship will open up other opportunities within the bank. So when we lend to a client, we hope that they'll give us that opportunity to lead the M&A process when they're foreseeing 1, 2 to 3 years down the line. Or let's say we lend to a company and they're looking to go public, right? Let's say, I'm not sure if you guys are familiar with Robinhood's IPO in 2021 or 2020, but I'm not sure who was the lead on the whole IPO process there, but typically companies will give these opportunities to lead the IPO or the M&A processes if that bank has a large amount of money like giving to this company. So if there's a great lending relationship established, banks will be able to win more opportunities with that client. And so just to walk you guys through like a little case study, let's say that we're like a team, let's say we're all working at Goldman Sachs or Morgan Stanley, and the board of Domino's Pizza has hired us to advise them on the acquisition of Papa John's. They think that Papa John's is an undervalued company, and they believe that by acquiring Papa John's, they could help their own business, right? They could, as the bullets say here, they could increase their market share in existing geographies. So of course, Papa John's and Domino's are very key players in the US market. And so if Domino's acquires Papa John's, they'll be able to further increase that market share, right? And then Papa John's, of course, has locations in places that Domino's doesn't. I'm not sure exactly where Papa John's is located around the world, but I know they have a few locations in Africa that Domino's hasn't even touched. So there's a lot of untapped potential in these geographies that through this acquisition, they could fully reach, right? And then of course, there's a lot of brand awareness that will be grown through an acquisition. For example, I know Papa John's, I think they have like Shaquille O'Neal, the basketball player, as their leading brand rep. And so they could acquire that brand awareness through the acquisition as well. And so in a typical deal like this, right, where Domino's is looking to buy Papa John's, as I said earlier, the investment bank and the corporate bank will work very closely together. The investment bank will typically do the entire financial modeling and valuation process. They would help Domino's figure out how much exactly Papa John's is worth. And the corporate bankers would figure out how exactly they're going to fund that acquisition. And so in terms of what investment banking does, just to go a little into the weeds on how this works, there are typically three types of valuation methodologies. You have the comparable companies analysis, the precedent transactions analysis, and the discounted cash flow. For the first two analyses, these typically include figuring out how much exactly competitors are worth to figure out how much your own company is worth. So let's say we're advising Domino's. We run the comps analysis on Papa John's, and we see that McDonald's is worth X amount of money, Chipotle is worth X amount of money, Jack in the Box is worth X amount of money. We typically look at these sets of comps. We take the median or the mean, the average of the comps, and then we apply it to the value of Papa John's. So it's kind of like this is typically an easier methodology to value a company, and it's pretty quick. And then you have the discounted cash flow analysis, which is, I'm not sure if you guys learned already, like the time value of money in calculus, but you basically model the value of a company by forecasting the cash that they're going to make throughout the next few years. And then you discount that back to now to figure out how much it's worth now. And so typically a comps analysis would look like this. This isn't like exactly the one we're using for our case study here for Papa John's and Domino's, but typically this would just be an Excel file. You'd have a list of companies. You'd have data for these companies. Sorry, is there a question? I can't tell if someone's mic is on there.
No.
Okay. Yeah, so you'd have a list of companies, you have data for these companies. And then these are very like niche values that I don't really want to get into because it might be a little hard to explain, but basically you just look at the average value of these companies and then you use that as a metric to value Domino's in this case, or Papa John's in this case. And then your discounted cash flow analysis, basically you're taking the financials of the company you're trying to value, you're forecasting these financials out, and then the goal of this entire analysis is to get down to your forecasted free cash flows, which you then add up, like the blue line highlighted on the bottom, you add that all up and you discount it back to present value. And then that's the value of your company. And this is typically looked at as an intrinsic form of valuation because unlike comps analysis, you're looking at the company on a standalone basis. I know it might be like a little confusing. I'm not sure if I'm explaining it too well either, but these are typically just high level valuation methodologies that investment bankers use to value a company in an activity like an acquisition, right? Because when you're advising Domino's and you want to make sure that they get the best price, you want to make sure that they acquire Papa John's for the best price possible, right? You're going to spend months, like the investment banking team is going to spend months on figuring out the value of Papa John's. And these are the types of methodologies that they use. And then once they figure out that valuation, they figure out how much Papa John's is worth. The corporate banking team is going to figure out how exactly they're going to finance that transaction, right? So let's say Papa John's is worth $5 billion. The corporate banker will take a look at the comps set that the investment bankers use. So let's say Papa John's' biggest competitors include McDonald's, Chipotle, Jack in the Box. And let's say these guys have X amount of debt to EBITDA, which is EBITDA is kind of like a proxy for cash flow. So it's like a ratio that a lot of people in finance like to use, like their debt to EBITDA ratio. You're kind of just looking at the amount of debt they have relative to the amount of cash flow the company generates. And so let's say the corporate banking team looks at McDonald's, Chipotle, Jack in the Box, and they have 6.4x debt to EBITDA. Right. So, and then you're going to apply that to this acquisition. You're going to say that, okay, Domino's can acquire this company by using this much amount of debt. And you're going to base that off the debt to EBITDA multiple. And then they're going to figure out what type of debt they're going to issue to buy this company. They're going to tell Domino's, okay, you guys are going to have to issue 6% unsecured notes to raise the appropriate amount of debt to finance this acquisition. And then they're going to talk about the equity for the transaction as well. So in equity capital markets, right? A lot of companies, like let's say you guys are just looking at Robinhood, right? And you look at I don't know, Coca-Cola, and they want to buy Pepsi again, and they want to finance that acquisition, and they want to make $3.5 million through a follow-on offering. They want to issue more stock to the public to make that $3.5 million. And so we're going to advise on that front as well. And so that was just typically like a very high level case study of how the investment bank and the corporate bank works together to deal with these very large financial activities that happen on Wall Street. And just some career advice. I would just say to be very comfortable with becoming uncomfortable. I know that sounds a little contradictory, but what I'm trying to say is it's very important to like try and step out of your comfort zone, right? For me, for example, growing up in high school, I was very afraid of public speaking. So now I'm really trying to take every opportunity I can to speak to large crowds of people and get better on that front, right? You want to improve your weaknesses, and then make sure you're constantly failing as well. If you're not failing like a few times every month, then your goals are just simply are not high enough. And it's very important to fail, because then you'll learn exactly how you can better yourself as a person and better yourself in the workforce. And then I'm sure a lot of people have given you this advice as well if you've been to these types of career presentations, but it's very important to network, right? You want to build your network. You want to get to meet a lot of people when you're in college. You can even start in high school, like coming to these presentations or coming to these types of nonprofit career coaching type of things are very important, because you can build your network that way. And then let's say 5 to 7 years down the line, you guys are looking for work, you guys need a job, you can tap that network. You can tap that network of people that you know, and then you can leverage it to find opportunities, right? And then, but make sure you guys are just balancing that networking with hard work as well. You don't want to be too much of a social butterfly where you don't really focus on academics at all. But you don't want to focus on academics too much to the point where you're not networking at all. So I think in college, it's very important to find that balance. And then just make sure, I know in high school, like most people are very into exercising, like sports is a big thing. So I just hope, in college, no one really sacrifices that. I found that it's very important to keep on exercising no matter how many hours you're working a day. And just try to be constant in every situation. I remember like an old basketball coach of mine when I was growing up told me that whether it be when you're hanging out with your family or your friends, or if you're in the classroom or the workplace, if you're lacking in one area, it's really going to translate over to the others. So let's say like when you're in the morning, when you're at home and just eating with your family, if you're very rude to your mom or your dad, it's going to translate over to the workplace and you're not going to be your best self in every situation, right? So just make sure you're not neglecting any area of your life there. Yeah, that was it for me today. Thanks for listening. Let me know if you guys have any questions.
Thank you so much, Joshua. If you have any questions, just feel free to put them in the chat or on mute right now. I think I'll just start because I have one question.
Sure.
So how can high schoolers like gain exposure to the finance field or like gain experience through extracurriculars in high school?
Yeah, so I'm not sure exactly how it works in your guys' high schools, but my high school had, just a high level finance club. So yeah, I'm not sure, Alice, if you guys have like an investment club at your high school or an investment banking club or a stock pitching club, but just try to join anything that's sort of related to finance. I know a lot of high schools also teach economics courses, and majoring in economics myself, I would say it's very, very relevant to finance. So honestly, just trying to get exposure on that front, join anything you can. Maybe start trying to invest yourself, right? Like make a Robinhood account. If you have a few $100s, try to figure out what could be good investments. And yeah, there's a lot of ways you can kind of get interested in finance, but I would say maybe just join clubs and try to start investing.
Yep, thank you so much. We have another question in the chat. So it is, can you describe how you decided on selecting your particular career? And was there a NYU course that influenced you, or a professor or an experience that you had?
Yeah, so it wasn't really through an NYU course or professor that influenced me because I studied economics. A lot of the professors that I had didn't really go the finance route. They mostly went into, the economics undergrad route, got a PhD in economics, and continued to be a professor from there. So what really inspired me to get into finance was probably because my two older sisters' boyfriends actually are in private equity. And just speaking with them on a very regular basis, they kind of showed me how interesting the space is and honestly how lucrative it is. And that just sort of showed me, okay, this could be a good role that, one, I could make money in so I could survive. And then another, it's a space that if you're good, right, you can get rewarded for it. And I think that's a very important idea to me because you don't want to be in a job where you're just, no matter how much better you are than the other person, you guys are getting paid the same amount, or you guys are getting looked at the same. I feel like it's very important to be in an industry where hard work and good performance is rewarded. And in this industry, right? Like for example, at Citi, at year end or every August or so, teams are evaluated on their performance. Individuals are evaluated on their performances. And so, if one person is better than the other, they're going to make more money than the other person. So I know it sounds like maybe a little toxic, but I think it's very important actually to have this sort of competition in your work life, because it's just going to be you're going to burn out, right? Because like you don't want to be in a place where you're working extremely hard and you're not rewarded for it. So.
Great, thank you so much. Anybody else have any questions? Feel free to unmute or drop them in the chat.
Yeah, I guess I could ask a question, Josh. So
Yeah.
like, what's your favorite deal so far? Like, have you executed any acquisitions, merger deals at Citi?
Yeah, so because of confidentiality reasons, I can't go too in depth. But I can talk about at a very high level. I helped one company renew or refinance their revolving credit facility. So let's just say like a company, we lent $800 million to this company. And that credit card, as I talked about earlier, because like a revolving credit facility is like a credit card, the maturity on that credit card expired. And so typically when a company wants to refinance their revolving credit facility, the investment bank has to do a lot of work to figure out, okay, like, do we want to continue this lending relationship with this company? And so one of the deals I worked on included, a few months of just drilling into the company, figuring out whether or not this would be good to continue this relationship, because do we want to have like, $800 million extended to this company for the next 3 to 4 years? Like, can we win more revenue opportunities in other areas? Like, if we have this $800 million extended to this company, will they give us that M&A mandate 2 to 3 years down the line? Or will they give us that IPO opportunity that they're promising us, right? So it's just like a lot of opportunities that we need to look at. And so one of my favorite deals would probably be that renewal of that $800 million RCF to this company.
Great, thank you. We have another question in the chat. So, did you do any internships while in college?
Yeah, so I did do a few internships. It was my first summer in college, actually, that my freshman year summer, I actually didn't do anything. And then my sophomore year summer, I took on a few internships. One was at a startup doing marketing. And then another one was at a lobster restaurant, actually doing like accounting work for them. So that was an interesting summer, but not too relevant to the job I'm at now. But I would say that, at the start of your college careers, you just want to undertake anything that would give you some sort of like work experience that you can leverage. So that's what I kind of did. And then I took on a few tax internships as well as an investment banking internship as well. And I also worked for a hedge fund, but it was mostly doing like outsourcing for a hedge fund. So a lot of these hedge funds on the buy side, a lot of the big focus is on investing, right? And winning a lot of money. So what my firm did at this internship was we provided back office accounting solutions to basically help them digitize a lot of the work that they didn't need to focus on so that they could focus on investing. So in short, it was just helping them kind of make more efficient their processes that they shouldn't be focusing on, so that they could focus on better things. And so yeah, those are all my internships that I did in college. And to get this Citi job, I kind of just recruited full time. A lot of people in finance, the route that they typically go is they grab an internship at their favorite bank in college. So let's say like at Citi, they would do a summer internship at Citi, and then a team would offer that person a full-time offer based on how well they did in their internship. For me, I just recruited directly full-time out of college, so I didn't have an internship with Citi previously. But a route you guys can go in college is try to get an internship at a place you want to work at full-time, because when you do these internships, typically if you perform well, the company will give you that full-time offer.
Great, thank you. And I think, Samuel, did you have a question you want to ask?
Yes, please.
Yeah, what's up?
Yeah, good evening, Josh. Thank you very
Samuel.
much.
Yeah, no worries.
I'm from Ghana, West Africa, and I want to pursue finance after college. I'm in my final year. I would like to ask, where should I start from? I'm reading business administration, bachelor's in business administration. With that, I want to find out, where should I start from?
Yeah, cool. Are you in college right now, or are you still in high school?
No, I'm in college right now, my final year.
Oh, cool. Okay. Yeah. Do you have any previous internships in finance, or are you just trying to get like a full-time job out of college?
I did one, but that was in the credit area, credit management.
Yeah. Okay. Got it. Yeah. Yeah, I would just say to start networking a lot, right? I'm not sure like how exactly big the finance scene in Africa is in Ghana, but I would just say to start networking, start reaching out to people on LinkedIn if you can. Just like try to reach out to anyone who works in finance in your area, and talk to them to see if there's an opportunity. I know it sounds very cliche, but that's really the only way you can kind of get your foot in the door. So.
Thank you very much. And
yeah.
Second question, I'd like to ask, what industry tool, is there an industry tool that I need to learn? Of course, I've been hearing about Excel and Python. I wanted to find out which one is the most appropriate, or the best to learn.
Yeah, that's a good question. I would say Excel. I think if you can improve your Excel skills, that would be very, very helpful, especially if you want to go into finance. Samuel, there are a lot of like courses out there that you can pay like a few $100s for to really improve your finance skills, your Excel skills. One that I would recommend includes Breaking into Wall Street. So maybe take a look at this this website, because they offer Excel modeling courses that basically are full-fledged case studies that investment banks have previously used before. So yeah, just try to improve your Excel skills, and yeah, there are a lot of avenues you can take to improve them.
Okay. Thank you very much.
Yeah, for sure.
Okay, anybody else have any questions? Okay, somebody in the chat said, how are the colleagues you work with? Is the environment competitive or collaborative?
Yeah, so I would say the environment is mostly collaborative. Obviously, there's like a few people in the workplace that can be a little tough to work with, but I think that's everywhere, right? Like some people are gonna, because there are performance year-end reviews where each individual is evaluated based on their performance, there could be some competition, especially with people that are the same year as you, because you're being evaluated compared to that other person, comparatively to the other person. So I would say like it's typically mostly collaborative, but at the same time, it can be a little competitive as well. I think it's healthy though, like a little competition is always healthy, right? Like as I said earlier, I think if it's just not competitive at all, there's nothing there to really like drive people to be the best version of themselves. So I think it's like a healthy competition, but yeah, it's mostly collaborative.
Okay, thank you. One other question is, what are some books and resources that a high school or student can use to learn about finance, business, and like investment banking as a beginner?
Yeah. So I didn't read too many books specifically tailored towards investment banking. It was mostly just through like researching online and talking to people in college. I think investment banking is like a very popular path that people in business schools like to take. So if you guys do, decide to pursue a business degree or a finance degree, you're going to learn a lot about it, even if you don't want to. It's probably like the most popular profession nowadays. So, but yeah, in terms of books, I don't know too many for investment banking. I would say what's really important though is just like understanding how the economy works and understanding, for example, like today, right? Like how is the Russia-Ukraine war affecting the economy of the US or the economy of China or the economy of Canada, right? And you can, one website specifically I would recommend that I've been reading a lot recently is the IMF, the International Monetary Fund. They have this, it's just like their own website, imf.org, where you can download free economic papers on these topics that I'm talking about, right? So like, for example, the other week I downloaded an entire packet of research on how the US is being affected by the war. So yeah, just like try to read economic papers. They're very, very relevant. And when you're interviewing for jobs, like you're gonna get questions like, where do you see the markets going in a few years? Or can you talk to me about the economy of Brazil, right? Like like how does that compare to the US, etc. So just try to get like a better worldview on how the economy works. And I think everything else will come in afterwards. Like investment banking really isn't that tough to learn about. So just, yeah, try to understand the economy first, I would say.
Great, thank you. Is there any other last minute questions? If not, I think that'll be the end. Thank you so much, Joshua, for taking
Yeah,
the
no
time
worries.
to meet with us. And thank you all for joining us today. If you don't have any more questions, feel free to leave. And thank you guys so much again.